We are back at it again here with another video with Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask for returns for to smash that like button. Tell me when you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the S&P 500 index. We're going to look at the SPY, the S&P 500 index, and what was discussed at the Fed minutes, which they revealed some information that can make things look a little bit more bullish. And we're going to talk about the different bear cases and bullish case scenarios. But before we do, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. And if you guys want to know about these stocks every single day early on in the pre-market, we strive for opportunities like these every single day. Check out the link down below in the description to the Discord. We look forward to having you join us. And we're going to jump right into it here with the S&P 500 index. And are we in a stock market crash, or could we run in the next few days? So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market, we strive for opportunities like these every single day. Check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the two stocks I mentioned this morning. Both of them gave 5 to 10%, 10 to 20%. But one of them turned out to be a home run of 20% plus, and that was HODL. We caught this one in the pre-market as it was pushing upwards. You could see that full strength under a bull indicator, and things went up nearly 5 to 10% towards the bell, quickly shifted downwards, and then took off a 10 to 15% run in a matter of minutes. And it jumped 10 to 15% two more times in a matter of 30 to 40 minutes after the bell, pulled downwards, and then the big explosive run was towards the Fed meeting. And from that dip to that rip, it hit a highest point of 25% plus. Once again, within minutes, you could see that full strength bull indicator and hit a highest point of 25% plus. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us. We're going to jump into these charts. So here we are with the S&P 500 index after having a volatile morning and jumping back up to newer highs and eating away the losses. Today the SPY has jumped after the Fed meeting, and we're going to talk about the minutes and what made it go up. But our SPY bot this morning sent us out at 9 a.m. a bear indicator, and put options were up 2 to 3x within minutes towards the bell and after the bell. And right when things started to pick up around 2 p.m., we got a bull indicator confirming the bullishness, and call options were up 2 to 3x within minutes as well, guys. This is our new release that you can now gain access to as well. The link is down below in the description to the 42 vision indicators and the SPY bot. It sends us direct notifications over at the Discord to have an edge within the volatility of the markets to maximize on opportunities, and you can now gain access as well. And the volatility is not going anywhere, and I'm going to continue to track it and watch it and make opportunities out of it, and you can too. So the S&P 500 index, right? If we pull up the SPY here, you could see that things were bearish on the 30-minute after the bell. On the 5-minute, we knew since pre-market, and then things started to pick up here around 2 p.m. fairly quickly to the upside, and it ended the day higher, erasing any losses and breaking out of that consolidation, which is super important to see that it happened. Why did it happen? Well, there's a few key words, and in today's video, we're going to look at this from the bigger picture on the 1 day, the 1 week, because there's some key things I'm watching that I want to share with you guys. And then also, what is it that could create a catalyst to go even further up from this dip back to the highs here and even higher? What will it take for that to happen? That's what we're going to talk about today, and I'm going to share with you guys why the stock market started pulling upwards based off a technical point here off the 30-minute, and then today this big spike that was pretty fast. Now, does it mean that things are going to go back up and the coast is clear? No, but very interesting reaction, happened very fast, and tomorrow will be pivotal moving forward the rest of the week and going into next week until the next Fed meeting, which is in March, coming up next month. But let's talk about what made it run up like it did. Does this mean the coast is clear? No. Is it guaranteed to continue? No. But there are some things to look at that can actually stir up things to continue in this upward direction. Even though things will be volatile back and forth, we want to see if there could be an overall direction back up, because the overall direction has been downwards, right? But it's been trying to come back up from here, went up, came down, and we'll see if it can actually take off even higher, breaking through some of the highs that it recently reached before falling back down, and it's trying to staircase its way back up. So let's talk about what was stated at the Fed meeting, and this is it. They released, which was said, that while the central bank intends to begin raising rates to combat inflation, right, its decision would be made on a meeting by meeting basis. That's it. That's all you need to know. They're stating that soon will be appropriate, but they just had a meeting on Monday, which was an emergency meeting, quote unquote. They just had the Fed meeting minutes today, and the next meeting isn't until March. So they're basically implying that if we do not squeeze another emergency meeting or another meeting from here till the next one in March, there is no other way to raise rates than by a meeting by meeting basis. They're kind of implying like, we want it to be soon, we're going to do it soon, but it's not going to happen unless it's on a date of a meeting. It's not going to be random. It's not going to be out of nowhere, which brings some clarity to investors. And then they talk about how today's minutes, right, the meeting minutes, did not come off as hawkish. And I've stated it in the Discord plenty of times that the Fed is being very careful because they do not want the market to react or create the same mistake that they did in 2018. If you do research and you go back to it, it affected the markets really quickly. And if you go all the way back to 2013 and also 2015, there were other overreactions as well. So they've learned from those mistakes. But regardless, something could always get bearish towards the first rate hike. So I do want you guys to be aware of that. But right now, these statements are bringing clarity or some type of understanding that there might not be a rate hike until the next meeting. And there's a few days until then, right? Almost a whole entire month from today. So when you look at the S&P 500 index trying to bounce back up, you could see how quickly it reacted, and a lot of stocks went up with it. Now, what will it take for the S&P 500 index to continue in this direction? Well, I'm going to show you guys. So we're going to talk about it here, and that's the 10-year Treasury. It needs to level off, okay? Stay within 2% and not go much higher, or if it was to pull back, not pull back drastically fast or anything like that, but kind of find a consolidation and a happy median that it finally found its stabilization point, and to stick around an area where investors can feel more comfortable that this has become the norm. Because when you zoom out, the 10-year Treasury has spiked up a lot in the last 2 months. A lot, right? So it's already pricing in what is bound to come. The next thing is the VIX. We want to see the VIX continue in this downward trend. And by the way, 42 Vision works to track these to see if things are getting bearish or bullish. And depending on how it's reacting, you could see what's affecting the markets. When the VIX is bearish, the markets can get more bullish. Not guaranteed, but it starts moving up. When the 10-year Treasuries are bullish, the tech stocks are bearish. So once it consolidates, it can kind of open the door to let investors get risk on. And as the VIX goes down, stocks could go up. So you could see it there. This has been in a very bullish stance. It spiked up huge from 20 all the way up to 32, a whole 50%. And we're finally going back down, and we're below 25. The lower this goes, the more bullish things could start to seem. There are a lot of variables out there that can make fear and the VIX spike back up. But the fact that the Fed has kind of eased away or kind of the path into the next rate hike, all of these going lower, which I would like to see the VIX closer to 20 or below it, and the 10-year treasury finding a consolidation or slightly pulling back, right? Not being too volatile, can actually create a risk on environment where stocks and the SPY and the overall market and even the NASDAQ can start pushing up higher towards the next rate hike. Once that happens, we have other variables to watch, which is what I'm going to talk about now, that we need to be aware of based off the technicals. Because what I'm talking about is a short-term possibility of a bullish environment. It's not guaranteed. It's not financial advice. I may completely be wrong, but this is what I'm noticing based off the data and these keywords. Meeting by meeting basis is when the decisions of raising interest rates will be made to combat inflation. Okay, so let's talk about the bigger picture and what we need to be aware of based off of technical areas. So when I pull up the SPY here, yes, we have here a lot more volatility on the 30-minute, but I pull up the 4-hour, you could see that things have been under a bearish indicator since way back here on February 10th. Things fell down from way up here at 454 to 435, bounced back up. We got white with red borders, and we're having a reversal here. So 42 vision, nearly almost every time there's white with red borders that pops up, eventually there's a reversal, and some are stronger than others and some are weaker than others. So far, we still don't know how far this one's going to go, but in the example, this one's smaller, this one's larger. This one's a smaller one right here that actually played out, and then things quickly went back down, and you get the extra layer of confirmation with ultimate 42 vision, the bull and bear indicators. So what I love about 42 vision is I'm able to see the dips, I'm able to see the rips, and have that extra layer of confirmation of the bull and bear indicators. Now, in the SPY on the 4-hour, we're under a bear indicator. I pull up the 1-day, and we're under a bull indicator. I've talked about how important this bull indicator is because it could be a fake out or it's actually holding true, because if no bear indicators pop up as we're pulling downwards and we reverse right back up, it's been actually confirming bullishness because specific levels have been met within the chart. So no bear indicator has popped up after it so far to negate it. So this still holds true. But this is the one I'm watching. And if this one switches quickly back up in the next few weeks, that is going to be a very interesting point in the chart because it's based off the 1 week. We have a bear indicator. It's been there for 4 weeks. And we have 4 more weeks to go until the next Fed meeting. And we're under a bear indicator. I compare it back towards 2018, the 2020 crash of March, and when this pops up, it does not pop up for a day, a week, or even a month. It pops up for months at a time based off the history, and it does not pop up every single day until the next bull indicator pops up, and they usually last for about several months to a year to even 2 years, as we've seen the last bull indicator from 2020 that lasted since April all the way until December of 2021 going into 2022. So super important to realize that this bear indicator is in a point where we need to see if this continues to consolidate, is there a real spike up, and if a bull indicator pops up to negate this bear indicator. If not, like I stated, everything in this video that could stir up a possible bull run that is short term towards the next meeting turns out to be a bull trap if not executed correctly with the timing of catching the dips, getting out on the rips, and knowing what's going on in the bigger picture. Because as long as this bear indicator is here, no matter how high stocks go up, if no bull indicator comes up to confirm it, then it's a very weak upward trend that can turn into a bull trap if the bigger picture continues to consist of a bear indicator and further weakness in the charts. But for this to get much weaker, it does need to break through the support here of 420 on the SPY and 4,200 on the S&P 500 index. And the same thing is going for the NASDAQ as we see it. It's been under a bear indicator for the last 5 weeks. As always, guys, thank you guys so much for watching, and let's make some money.